look at the next problem. The next problem tells us, problem 2, gives us various scenarios, and our job is to prepare adjusting entries for these items. Let's look at these. On November 30th, the end of the current fiscal period, the following information is available to assist Allerton Company's accountants in making adjusting entries. A. Allerton Supplies account shows a beginning balance of $23.50. Purchases during the year were $42.18. The end-of-year inventory reveals supplies on hand of $13.97. What are we going to do? $23.50 plus $42.18 reveals everything available minus what's on hand. I want to do counterclockwise, right? So what's on hand? So it should be the $23.50 plus the $42.18 minus the $13.97 on hand is what's been used up.
Does it take a while for people to feel comfortable in the terminology of the words?
Absolutely, because think about it, you're learning a whole new language as it reveals to this accounting concepts. I mean, everything's new.
Yeah.
Everything's new. And I hate to sound like a broken record, but the best way to do it is practice, practice, over and over again. You know, that's what helps it sink in. Okay, can we do B? B says, the prepaid insurance account shows the following on November 30th. Beginning balance $47.20. Then on July 1st, there was a debit to it of $4,200. And then October 1st, another debit of $72.72. The beginning balance represents the unexpired portion of a one-year policy purchased on September of the previous year. The July 1st entry represents a new one-year policy, and the October 1st entry represents additional coverage in the form of a 3-year policy. So remember, we're at the end of November, okay? So we need to break these 3 different insurance policies up. The first one, an unexpired portion of a one-year policy purchased in September, okay, of the previous year. So, did that all get used up? Yeah?
Yes.
It should have all been used up, because it's gone now. It was purchased in September, it would have expired in August. This July 1st, 4,200 shows a new one-year policy. So it started in July. So July was the first month. We're now sitting at November. How many months have been used up? 5 out of 12. So you'll take that 4,200, divide it by 12, and take 5 months of it. Okay?
1750.
Perfect.
What is it?
1750. Then the next one, October 1st, represents additional coverage in the form of a 3-year policy. So wouldn't we take this 7272 divided by 36 months times 2? Or 404?
They're trying to confuse us.
This is the most confusing. So as you can see here, what we are going to show as insurance expense that's been incurred is the first one in full, the second one, 5 months of it, 1750, and the last one, 2 months of it, right? And we'll show an insurance expense of $6,874 as your debit, and your credit is your prepaid insurance. Okay? How are you guys doing so far? Next. See? The following table contains the cost and annual depreciation for buildings and equipment, all of which Allerton purchased before the current year. So we have a building. We see the cost, $298, and the annual depreciation of $16,000. Equipment, $374, annual depreciation of $40,000. What are we going to do here? We're going to show each one. Depreciation expense on building, 16. Depreciation expense on equipment, 40. And then we'll credit our contra accounts. Accumulated depreciation on building, 16. And accumulated depreciation on equipment, 40. Next one. On October 1st, again we're dealing with November 30th, the company completed negotiations with a client and accepted an advance of $18,600 for services to be performed monthly for a year. The $18,600 was credited to unearned service revenues. If this was a prepaid amount for 1 year, how many months have been satisfied?
November 30th.
A year and a month.
On October 1st, and we're on November 30th.
2 months.
2 months. So how are we going to calculate how much of the $18,600 is now service revenues?
And then 12 months multiplied by 2.
18,600 divided by 12 times 2 months gives us $3,100. Now, E tells us the company calculated that as of November 30th, it had earned $7,000 on an $11,000 contract that would be completed and billed in January. So, how much has now been earned? $7,000. So we'll show accounts receivable, $7,000, service revenue, a credit of $7,000. Next, I see among the liabilities of the company is a note payable in the amount of $300,000. On November 30th, the accrued interest on this note amounted to $18,000. What happens when we have a note payable with accrued interest? It's a liability, but basically we have interest expense as our debit, and our liability, interest payable, gets credited. Then we have on Saturday, December 2nd, the company, which is on a 6-day work week, will pay its regular employees their weekly wages of $15,000. So the company's on a 6-day work week. They get paid on Saturday, December 2nd. When is November 30th? Thursday? Right? So if $15,000 is for a 6-day work week, how much do we need to accrue for the Monday, Tuesday, Wednesday, and Thursday? So as you see here, we take our $15,000, we divide it by 6 days, but November 30th ends on a Thursday, so we need to accrue Monday, Tuesday, Wednesday, and Thursday, or $10,000. Now, the next part asks us, explain how the condition for revenue recognition are applied to transactions E and H. E shows that it had earned $7,000 even though we weren't going to get the money or even bill it until January. We still need to show what we have in fact completed. Okay? H, on November 29th, the company completed negotiations and signed a contract to provide services to a new client. Did we do anything? We have a contract, but did we earn it? Nothing. So there's nothing we need to do there. But with E, we actually earned the money. In transaction E, $7,000 has to be recognized as revenue Because services have already been provided, and there's an obligation to pay for them. With transaction H, this is not even recognized because no services have even been provided, and there's no obligation for the client to even pay. Nothing's happened yet.
So it's no entry.
No entry. I think what I'm going to do, guys, is let you work on your own for problem 3. I think that will be helpful. For problem 3, go through it. You've got the solutions. I already have problem 4 on a lecture for you. And then tomorrow, I will have problem 5 on a lecture for you. So, there's a lot to cover in this chapter, but really, this is a huge piece of understanding the whole process and then what needs to transpire.